Hello and welcome to Crypto Concierge. It's our second episode. I hope you like the first one. If you haven't, go ahead. There will be a link down in the description. Check it out. It was a real nice little intro. And today it's me, Investoni as usual, and Hiro, and we're going straight to the content.
Let's do it.
Let's do it. So, Hiro, do you have any follow-up questions? Because our session of the Crypto Concierge is going to be ongoing conversation, going in details and trying to keep it as real as possible, as newbie friendly as possible, the people who are just joining us. So last time we spoke about stablecoins, about Bitcoin, how Bitcoin works, and touched briefly about the importance of investing. So where you want to
Mhm.
take this conversation today?
Yes, I would appreciate if we could take off where we left off, perhaps continue on this investment component a little bit. That way, it would prepare me for the practical application of it to start at some point soon.
Yes, yes. We want to keep it practical, right? We don't want to just theorize about anything and everything and never get to the
That's right.
practical aspect, right? But yes, investing is
Yes.
very important,
Mm.
right? In order to
Hmm.
understand why you need to buy Bitcoin, you need to understand why do you need to invest in the first place, right?
Mm.
And um, let me ask you a few questions first. I bet you heard inflation, and this term is always spoken lightly. Do you know what is inflation?
No, please explain. All I know that it's more money from my pocket.
Yeah. So inflation, to put it simply, is the price growth. So when you see something
Mm.
is growing in price, usually people call it inflation, right? As you noticed, and you sent me a few
Mm.
pictures of the eggs a couple of weeks ago, right? The price was
Hmm.
literally going up week
Mm.
after week, right? And I bet everyone who's doing shopping noticed that. And sometimes it's funny when you find maybe a little brochure with the prices from the store, and then you can compare a couple of years ago, the
Mm.
same items costed that much, and now
Mm.
item costed this much. So in order to measure and keep track of that, the index, which is called the Consumer Price Index, CPI, was created by the government, by the departments which are observing this number because they need to know and they need to a way to measure uh, the price appreciation of products.
Mm.
So, for example, yesterday, usually it's on Wednesdays every month, we get the new CPI reading, new data on consumer price index or on inflation. And yesterday number came at 2.9%.
Mm.
That's
Mm.
average per year, right? So they take the data over the last month and they extrapolate it and then they get to this number.
Mm.
And you might say, well, 2.9% a year doesn't. First, I don't know, what's your reaction? Does it sound like a lot or not a lot? I don't know, 2.9% a year.
It depends what that number is pointing to 2.9% really doesn't ring a bell one way or the other. It just depends on what that number is supposed to mean for me.
Well, it's supposed to mean that stuff which you buy on a daily basis is appreciating at, let's say, 3% per year. Does it sound like a lot or not to you?
Okay, so you're specifically asking in terms of inflation, it being 2 point some percent.
Yeah, that's what
Yeah.
CPI,
Okay. No,
Consumer Price Index, is supposed to show.
I think it's close to ideal, I would say.
Hmm.
Uh,
Okay.
uh, yeah.
Then, first of all, I'd like to ask then, do you think that the salaries are growing at the same rate? Do you feel like
From what
it?
I hear, often not.
Okay. That's sounds like an issue, doesn't it? So,
Yes.
yeah, if your salary is not catching up to the
Hmm.
inflation, official number of inflation, then you're getting poorer and poorer from one year to another. Is it not?
Mm, true.
It sounds like that, right?
Yep.
Yes, that is one issue. The other issue is that it's compounding, right? So last year it went, let's say, 3%, and then next year it will be another 3% on top of the previous 3%. So you might have noticed the number here, minus 97%. That's how much the dollar lost since 1913. So in 112 years, the dollar's purchasing power dropped by 97%. 97%. Let that sink in, right? So that's the power of compounding for you. That's the first thing. Then there are different years when sometimes inflation is less than 3%, sometimes it's more than 3%. For the past couple of years with the COVID and all the shenanigans which happened back then, the inflation went up, and we had periods of time when inflation was 7% and even double digits in America. And we're talking about America, right? We have listeners potentially in all over the world, and inflation in these areas might be more or less. We're talking about the US because that's where you are, and United States is by far the largest economy. If any of you listeners are wondering why US is always important, is that the GDP is the size, the way to measure the size of the economy of the United States is probably dwarfing any of other countries. Maybe China is getting close. China is number 2, but it's still way smaller than the US. So dollar is, as you probably know, is world reserve currency, and it's still losing that much value, right? Now, 3%, as you said, probably doesn't sound as much, and 112 years is not really, that doesn't tell you much, right? You're probably not going to live for another 112 years, neither will I. But it's something to keep in mind. If someone, you like a grandparents would leave you a certain amount and say, okay, open when you get there, and buy yourself a pair of shoes. By the time 100 years later, it's probably not going to be enough for, a shoelace. But this is also only a part of problem, because CPI, as I said, is a measure which was created by the government. And this index is very easily manipulated. And I don't mean it in, conspiracy way. No, it was designed like that. And certain items there, first of all, it doesn't include certain items. That was designed that way that, for example, it doesn't include gasoline, which supposedly there was different explanations why it doesn't, because it's too volatile, but realistically they just don't want this number to look bad. Because we all know that gasoline can really jump up and down, right? And certain items, and I'll just give you an example to keep it simple and a little bit engaging. I don't want to go too much into details, but for example, if the part of this index, consumer price index, at some point there was a steak there, right? But then steak is going up in price too much, and this index still needs to look a little bit better. They switch steak with the pork ribs, for example, and they show that the price didn't go as much. And then the ribs, they switch for minced meat, and then the minced meat for canned meat, right? Because it says that items could be substituted with the similar items. And you can argue that meat is still meat, but it's not really the steak, which is appreciating 3% a year, but similar items. So, inflation. 3% is bad enough, but 3% is not real inflation, right? And you've seen this on the price of the eggs. So that's why it's very important to invest, because the salaries are not catching up with the real inflation, and are not even catching up sometimes with official numbers. So if you save the money, if you just put the money in the bank account, the bank is not going to pay you 3% a year, at least not today, right? So what's your option? You have to buy something which can give you a better return, better than 3% return a year. Well, 3% is the minimum, right? As we said, real inflation is probably close to 5, 6, 7, depends, right?
Mm.
Do you have any comments? Do you follow what I'm saying? Am I rambling too much, or I'm right there at the point?
No, just for the last maybe a couple of seconds, it's become a lot more close to me. But some of the stuff that you were talking about prior to that big chunk, I'm gonna have to go back and do some homework myself, I think.
Yeah, I think I should start giving you homework so you can do some
Yeah,
research.
yeah. It's been so long that I've had such subjects coming into my mind in this focused way. So, I'm just usually scanning through the news kind of thing, right? So, uh,
And do you want to share a little bit of your background, why you never really considered investing? Because you told me an interesting story. I want the listeners to hear that.
uh, believe I explained to you how, first of all, coming from where I come from, which is Asia, very much conservative towards a certain way of handling money and how to build your life financially. There was a set ways of virtue being handed down to us where things like investing into stocks and stuff like that was almost categorized with such things as lottery, gambling, which was categorized as something that one shouldn't be doing if you were morally a good person, so to speak. So it was always in the shadowy area where such things as investment would come in light and or rather when it receives that spotlight, it would always have a bad spotlight. So I think that is one of the reasons why I would be very reluctant to consider investment. And two, as a result, I became a believer in just working and earning money and do what I want with it, but not really invest. I work, I earn, and I live. So this whole new chapter that I hope to look forward to is the idea of embracing what investment could be, and that it doesn't necessarily have to be tickling my guilt conscience, so to speak.
Yes.
So that's the reason why I, in short, stayed away from investments, so to speak, quote unquote. Um, I hope
Yes.
I answered your question.
Yeah, and I can relate,
Yeah,
right? It's similar. It was
yeah,
similar in my family, in my
yeah.
background, right? Where older generations they considered it gambling, as you said, and I mean it's understandable. A lot of people have bad experience because they don't have enough knowledge. They just go there and they're being driven by two very strong forces, fear and greed. And how many stories you heard when someone bought something very high and then in a couple of weeks or months or even days, it just went straight down, right? And people feel depressed, obviously, because maybe they put too much, right? And then they feel like they wanted to, get a quick return, certain percentage they had in mind. They maybe had saved some money, and they was like, finally, I get a little bit more, than I can buy the house of my dreams. They put this money. A couple of weeks later, it's not even enough for a car, right? So that's why that's one of the goals of this channel, right? For to help avoid these mistakes, to be informed why we need to invest, obviously, how to do it, and what not to do, right? So I wanted to show you real quick a chart, which is a chart of S&P 500, which is an index representing U.S. stock market. What is the index? Do you know what's the index? What's S&P
Mhm.
500? Yes, you do? Okay, great. For those who might not know, S&P 500 is a basket of, do you see that now?
Hmm.
Is a
Yes.
basket of stocks of 500 largest companies in the US, right? And this little um, rectangulars, very vertical rectangles, they are called candles in trading. And so there are red and green candles. That's just a little bit of background. We're not going to go on trading today. just wanted to explain what you're looking at. So, and they all represent the price movement, right? And every single candle in this chart represents a month, right? So you're looking right now at the bottom there, it's probably too small, but now you're looking at 25, 30 years of data history. And if you look at a long time horizon, you see that it only goes up and to the right, right? So if you held anything for the past 30 years, you would be up, right? Regardless where you bought. If you bought it at like the thousands at the top here, the bottom here, at the top here, the bottom here, at the top here, at the bottom, right? You would still be up today, right? Other than the people who bought last month, right? But you can absolutely, let me see, logarithmic chart even shows it better, right? So of course you don't want to be the one who's buying here and then selling here, but had you held, it'd still be fine. So one of the best investors of the world, of the history of the world, do you know who's considered one of the best investors?
I don't know the longest investors.
Yeah, and one of the guy, his name is Warren Buffett. You probably heard
Oh yeah,
him
yes,
of
yes,
him.
yes,
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 he's
yes.
an older guy. He's approaching his 90, and he is known to be the guru of investing. Well, one of his, yes, he is a guru. He knows how to read all the financial documents and do, um, you know, educated investing, obviously. But one of the best tricks of him is that he buys on a longer time horizon. He doesn't try to time the market. He tries to ride the wave. Why is the market always only growing up? Do you know why it keeps going
Now,
up?
is that I was going to ask, has it only been growing as far back as it ever allows us to go back?
Yeah, absolutely.
Okay, then you've answered. Okay, I see the dinosaur.
Yeah, that's prehistoric. So there is no data on TradingView beyond 1971. Yeah.
Oh, that's when I was, I think, born, huh?
Oh, yeah. Oh, great.
Yeah.
Well, actually, no, it's not 1971. My bad. It's 1871. That's
Yeah,
not
because
when
I
you
was
were
gonna
born.
say if that became an dinosaur, that would make me feel a little bit older than I need to be. But yeah.
Yeah, TradingView is just being playful. Sometimes for Christmas, they just add like a snow, and the snow starts to
Hmm.
fall all over the chart, which I don't know who came up with this UI, but I think he should be fired because that's not what you want to see here. Anyway, but I like the dinosaur though. Anyway, so why is the market keeps going up? For the same reason, inflation. It's not only your eggs are getting more expensive, it's the dollar dropping. And that's why the companies are getting more expensive. So the same dynamic. Yes, the companies are obviously growing. The Apple 20 years ago was a tiny, office and maybe even a garage space when, the Steve Wozniak was building one of his first computers. Obviously, it's grown. Obviously, the production, scaled, and now in every house or most every house, there is some Apple device, and the same is true for like a lot of other companies, right? Especially tech companies nowadays. But
Hmm.
that's not the
Hmm.
only reason. These companies they don't have to grow at this incredible speed. All they need to do is
Yeah.
just be, because the people who have money, right there are people who live paycheck to paycheck, who have zero investment, not because they don't want to invest, but because they don't have money to invest, right? And that's the big problem. But there's also a lot of money, not a lot of people, but a lot of money, which uh, very wealthy people have it, and they know about inflation, right? They don't need to have this session. They are well aware of the fact that their piles of money are losing value
Hmm.
every year, and they
Hmm.
have to find a way out of it. And their way out of it is to buy something which cannot be printed and which appreciates the value. So, to put things very simple, if you want to price eggs in dollars, then you're
Hmm.
obviously losing, right? The dollar is losing. If you want to price eggs in Tesla stock or in Apple stock or in something else, then that's a slightly different picture. What's the denominator? So if your Tesla stock is outperforming eggs, then you're fine because you can always sell it and buy more eggs. So this is why stock market is growing because large sums of money are exiting, trying to exit dollars and try to buy anything and everything, which is not as manipulated, as printed as dollars. Right. And then, of course, the companies are growing. And then some of the companies are paying dividends. Not all of them are paying dividends, by the way. You might have thought, like I was under when, before I started studying it, I thought that the companies are always paying dividends. That you hold a share, and then when the company makes profit, then you get a part of the profits. That kind of makes sense, right? You'd be surprised that most of the largest companies of the world, they don't pay any dividends. So why would you
Mhm.
want to even hold their shares? Well, because they appreciate. They're called growth companies. They're focused on growing, and supposedly the price appreciation alone is enough incentive for the investors to hold it. Okay, so did I answer your question why stock market's only going up?
Yes, you have. And it's silly, huh? Because this sort of thing makes me realize how, again, the kind of texts that you shared with me earlier, how in hindsight, there's a lot of should have, could have. And that's why I think it's important that we look forward and start. You know what I mean?
Yeah. And
No, but
it's
but I am not so sure about this whole idea. No, what I mean is it's uh what a fun thing, right? Because it's just set up in such a way that it's going to work because the more money that go, I mean, it just sustains itself. I mean, what the heck?
yeah, right. And the funny thing, of course, I'm oversimplifying it, right? There's a lot of,
Yes, I
but
understand.
but at the same time, economics is not a rocket science. It's not
Mm,
quantum physics where you literally have to be smart to figure it out,
mm,
right?
mm, mm, mm,
Yes, but the suits, the finance professionals, they intentionally made it more complex than it is.
mm,
Of course, to like day trade and try to figure out best time to buy, best time to
mm, mm,
sell,
mm, 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 mm,
that
mm,
is
mm,
very
mm.
difficult.
Yeah.
But to understand the
Mm,
basics dynamics, basic dynamic, why is the market always going up? And that's fair for the US market, right? Like Japanese market looks slightly different, right? But that's a
I mean,
separate
that's yes.
conversation.
Yes,
That
yes,
is a
yes.
separate conversation. But
Yes.
US is in the unique position
Mm,
because the dollar is a world reserve currency and it's not pegged to gold. It's not pegged to anything. US can print as much dollar as they want and there will be still always demand.
mm,
And we can go into that. Why is that too? But what I want to understand that unfortunately, not a lot of people even understand it in the simple way I explained it today,
mm, mm.
right? Be
Well, I'm not going to claim I understood it fully. I mean, but I'm going to have to say, I'll carefully kind of go over it one more time. Sure. Many more times.
yeah, but it's something which
Yes.
makes you wonder, right? It's something which makes you want to learn more about it.
It just seems like it almost has to be kept to a certain percentile of population, in the way that if 100% of population decided only want to invest, then we have a problem, right? So it naturally doesn't uh, mean that this is something that it should be universally practiced and it should be the only thing we do in life because, after all, does it really bear fruit on its own if there was no really tree?
Very interesting. I think you're slightly confusing trading and investing
Okay,
because, yeah, we
then
can't
I have
all be.
misunderstood. Yeah.
No, we can't all become traders and buy and sell on a daily basis. That's absolutely not what I was saying. I'm
No, no,
just
no.
saying, yes, that investing
I understand.
in good companies or in commodities or in
Mm,
Bitcoin uh, is it's just a way of saving money, really saving money, because there is no other way. If you don't invest, you don't save, kind of thing, because you're
correct.
losing your purchasing power. And I think that anyone who has any amount of money which they don't need tomorrow or hopefully next month, hopefully next year, they should indeed be investing. That would be nice
Yes.
because not
So I
only rich
understand that.
people would, yeah, go ahead.
I
Sorry.
understand. No, no, I just meant to say that investment to replace the concept of traditional conventional saving, yes, I fully understand. But if investment turn into uh, bringing more than just better than saving it at the bank, but really trying to gain a financial plus, then I think that can be everyone's job on the planet.
Yeah, no, that's for sure. It cannot be, and it wouldn't even work. And I'm glad that
I
you
know
you
exactly.
pivot.
That's my.
Yeah, I'm glad that you pivoted there because I can also tackle this and I want it. I think it's important to understand because once you start learning about investing and you start learning more about charts and you greed in you will probably tell you
Hmm,
that would be nice to catch the bottom, buy the low, and then the fear would keep telling you that you should sell because it's dropping. So fear and greed is going to mess with you. And compare like investing is just um, not trying to play against the system. You just follow the flow. Money being
sure,
printed,
sure,
assets stay
sure.
where
Yep.
they are. So you
Hmm,
just taking the advantage of the way the financial system
hmm.
is designed right now.
Absolutely. Yep. I
You're
get it.
not,
I'm
yeah,
not trying to build a block in my head or, trying to battle this. No, no, I'm just commenting where my mind is
sure.
leading. And definitely that's what I mean. It easily leads to, oh, then should have, could have. Well, never mind. Just start it because it's there.
Yeah. No, and I'm
Yep.
glad that you're saying that that's our format, right? We're still getting
Hmm.
used to it, but I'm sure
Yep.
that some people will have the similar thoughts and you just being a
Yeah, yeah.
voice of a listener, right? So
It's
now
great.
the trading, all right,
Mm,
when you enter the market, well, first of all, you have to understand
mm,
trading is a competition. It's a zero-sum game. What does the
hmm,
zero sum game means is what you win when someone is losing. Right? There's a lot of
mm,
examples in life
hmm, mm.
of that, and there's a lot of examples. Like the simplest example would be the gambling, like when we sit down to play with the cards. If I win, that means that you lose, right?
Yep.
So the same happens in the market on a different scale, and that's probably why our ancestors saw it as gambling, because when the market goes down, why did that's one of my favorite questions. Everyone would also ask, why did the price of this drop? The only
Mm,
reason why it dropped,
hmm,
because there was more sellers than buyers. As
hmm.
simple as that. All the rest
Right.
is a noise, right? Why did it go up? Well, because there was more buyers than sellers. And I don't mean people, I mean money, right? Because it can be
Hmm.
one person dragging all the market. Not one person, but you know what I'm saying. Anyway,
Yep.
so when you try to trade, like today, you listen to this beautiful video and you saw the chart and you're like, hey, but I can do better. I can buy low and so high. Well, the problem is that you are entering on a amateur level, because that's what you are if you're just starting,
Sure.
in a professional, highly competitive market.
Mm.
Because the
Hmm.
people are there, that's what they do, right? That's not 100% of
Mm.
the population, it's percent of a percent uh, of the people who are doing
Mm.
it 24/7. They don't even do it 9 to
Mm.
5. They do it 24/7. That's their life. They analyze all sorts of data now. They have bots, they
Mm.
have
Mm. 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 Mm.
analytic floors.
Yep.
They even like the some traders, they have geo located closer to the server so their transactions go faster. Right.
Mm.
So when
Mm.
you think that you can outperform them on your phone, you're kidding yourself. No. Then again, you can
Yeah.
get lucky, obviously, well, maybe one time, and that's actually
Hmm.
a
Hmm.
very bad thing. If on your first ever trade you get lucky,
Oh yeah.
then you think you're a genius. Then you're probably
Yep.
gonna lose it all. We're not
Yes.
talking about getting lucky. We're
No.
talking about solid strategy. And just
Hmm.
to emphasize, I wanted to show you this is also one of my favorite case study, which I'm about to show you, um, comparing trading and investing. So let me see this case study. Uh, do you see it now?
Yep.
So there was a theoretical case that had you invested at $10,000 in 1980 in the market, you would have gotten $1 million by the end of 2020, right? So 40 years, that's what you've gotten, right? From 10,000, a million. Now, provided you didn't have to do anything, just buy and hold, come back in
Yep.
40 years. So this huge candle, that's your hold buy and hold strategy. Had you missed 10 days out of 40 years, 10 best days, not a random, but best, 10 best days, you would have gotten less than half of that. Can you imagine? Out of
It's
40
wonderful.
years,
It's
40
wonderful.
years, 40 years, you missed 10 best days, half. You missed 20 best days, quarter. You missed a month out of 40 years, 170,000 instead of a million,
Yes.
right? You
Sure.
shot yourself in the
Hmm.
foot. So
Hmm.
that's a beautiful representation why trading is not what you want to do. Because
Oh,
the
oh
chances
no,
of
no, no.
you missing 10 days out of 40 years is very, very high.
Yes, I have seen many or rather quite a few of my very close friends chisel away at their own lives because of the work that they do in this financial trading world. And I think that was something that I didn't have the, intelligence nor the power to do it. I really was impressed for those that are in it, and it's amazing. But this number, I mean, the chart is very, very profound. It's very interesting. I like uh to kind of digest that. It's a great story. Not story, but what you're sharing is great.
Yeah, it's yeah, it's as simple as that, right? So,
Mm.
if anyone was thinking about just go ahead and trade and catch bottom, catch top, no, I mean that's not what this channel is about. You can become a trader, but it's not as simple as pulling up your phone, downloading, I don't know, a trading app and do it.
No
Because
way. No, no, no,
yeah,
no.
no way.
No.
That's not what we're tackling right now. We're talking
No.
about long-term investing. Yeah, and then you
Yes.
can say that long-term investing, it's similar to trading in the sense of that it's still a zero-sum game, but I mean, not really, because you're
Hmm.
just going with the flow. Inflation is taking care of price appreciation. The companies are hopefully growing.
Hmm.
So you're just going with the flow, right? You're not trying to outcompete anyone. You just do. And
Yep.
another strategy, which we kind of moving towards the practical application
Mm.
of
Mm.
things, um, is a strategy which I would recommend you to start with. And I cannot recommend to a viewer, but I would suggest to look into this. It's called dollar cost average, or usually referred as DCA in our world. What does that mean? It means that you pick a dollar number and you pick a frequency. For example, once a week, every day, every month, every 2 weeks, depending on what you want to do. And you buy what you want to buy blindly, not looking at the chart. Now, when you get a little bit more experience, you might want to buy when it goes down, like double your amount, maybe. But then that's not necessarily really what you really need to do. Is just consistently buy in the thing you want to invest into. right? And I can show you
Hmm.
again the results
Hmm.
which you could have experienced or could expect from this. And I'm saying yes, past performance is not a guarantee of the future return, right? But for
Sure.
example, I didn't even do any settings. I just picked it as it is on DCA BTC, right? In the end of the day, we're going to be talking about crypto. So this is a calculator for the Bitcoin. So had you purchased $10 every week, 3 years, starting 3 years ago, and didn't sell any for the 3 years, you would have invested 1,570, and the current value would be 3,120. Right. So you can play with this and you say, what would have happened if I started 5 years ago and accumulated for 5 years? And you would have invested 2,600 and get
Listen, this is
6,007.
this is a dangerous chart. You know that.
I don't know actually why it's kind of showing it like that, but yeah, I know. I mean, what do you mean it's a dangerous chart?
No, because first of all, we're playing with not the money part. No, this financial aspect is understood, but I find it interesting that sometimes we like to believe that we have a guarantee for tomorrow. So, um, but it's very interesting. This chart is for a good reason there, but it's amazing. Yeah, if you could send that to me, or what is it called again?
Yeah,
Yeah,
of course.
okay,
We'll leave all the
I'll take
links.
a look.
Yeah,
Yeah, this
we'll
is
leave
great.
all the links under the description. So I will show the case study, the
This
US
is
dollar
great.
value, and
Yeah.
the DCA Bitcoin. Yeah, I don't know why it's representing it a little bit weird here in the end, but yeah, I think it's just bugging. But the so here this chart also represents the value, which you would have
Mm,
had, and had you timed it wrong. Like had you just bought it in the top, at some point you
mm.
will experience the loss, but all you need to do is do it consistently. And again, inflation, price appreciation of the good assets, it will do the job for you. You don't need to overthink it. That's the beauty of it. You don't
Beauty.
have to overthink
It's
it. You
beauty.
just do it consistently, right?
It's
And
let's
yeah,
let's let's do it.
yeah, and
Let's do it.
the thing which I want you to keep in mind, and all our viewers, if anything, from this video,
Hmm.
is time in the market beats timing the market. Like even if you like, first of all, you cannot time the market perfectly unless you're a professional. But the time you spend in the market will work to your
Mm.
favor, right? So if
Sure.
you
Okay.
if you have for example,
Nice.
$1,000, which you know hopefully that you're not going to need in the next 3, 5 years, right? It's better to invest this thousand rather than take it 10,000, and in case tomorrow you need it for some emergency, it's possible that it will go down 30% and you'll have to sell because it's an emergency. Yes, so that's where the
Yeah,
problem
yeah, yeah.
starts,
No,
right?
no, very good. But it's very helpful. It's very, very helpful.
Yeah.
And I
So
can't believe how low this threshold is, and also it isn't presented like that to the world enough. I mean, I was not really able to approach this with much, um, ease unless it was like this. I would still be thinking, oh, it's going to be too complicated. It's going to be a little bit messy, uncertain. I mean, but it doesn't seem like it. So, man, I hope this helps for everyone because it seems like that door is pretty close by and easy to open.
yeah, and again, the things which we want to remember, pick any number, no matter how small it is, but that you're confident that you won't need it for the foreseeable future. The longer the period you know that you won't need it, hopefully, the better it is. You will sleep tight because you know that you don't need it, and you know that you won't have to sell it at a loss at a certain point, right? And as you said, the threshold is really low. You don't have to buy a full Bitcoin. You can buy any number of dollars which you will feel comfortable with. Um, yeah, so that's where we at. And I don't know, you wanna ask any other questions? Or I see that
Well,
you're impressed, right?
yes, and it was a big bite again, so I do feel like it's getting full. I need to digest, or I would like to digest a little bit more. Obviously, there is more questions that are already coming up in my mind, but again, I think I might have had enough for today.
Yeah. Then I'll give you a homework, right?
Yeah.
Because
Oh,
next,
okay.
yeah, well, you gotta do some
Yeah.
work too, right? No, because next session, I hope we can tackle the real issues like how to do it, how to buy it.
Hmm.
And
Hmm. Hmm.
yeah, there are a lot of tutorials on the internet, right? But I just think that in our format, if you have any questions during the setup of the app, you can ask me. If there are really none, then it's great, and you can uh, what I want you to be able in the end of next session or maybe even during
Hmm.
doing homework,
Hmm.
you should feel
Hmm.
comfortable to send a link to someone and say, "Hey, look at the video and do this," right? Because we will have links to crypto exchanges where you could go ahead and
Yep.
buy
Sure.
some
Mm-hmm.
crypto,
Hmm.
right?
Hmm.
So I
Hmm.
would ask you to try and open Coinbase account because you're in the
Hmm.
US. Coinbase is a US public company. So I think that it would be the simplest way for a lot of US citizens and residents to use it. And then you let me know how did it work? Was it easy or was it not? And then
Hmm.
tomorrow, or not tomorrow, but the next session, we can discuss this process and I will show you how to withdraw from Coinbase or how to just keep track of your crypto and how to maybe set up a DCA. And we can talk about some other apps which maybe in other countries are more accessible than Coinbase.
Yep. Got it. Let's do it.
All right. Well, thank you, Hiro. It was a pleasure talking to you
Thank
as
you.
usual.
Thank you. Thank you.
Bye bye. See you. Subscribe and
All
like
right.
if you
See you.
like it. Bye.
Bye.